So most cryptocurrencies rely deeply on a technology called blockchain. And before we deep dive into crypto, it is really important that you understand the underlying fundamentals behind it. So, blockchain was mainly invented to circumvent documents from being backdated or modified, and essentially creating them to be totally immutable. So, how does blockchain really achieve it? So, in a blockchain, everything is essentially made out of a chain of transactions, which all begins at something called a Genesis block. Now, Genesis block is something which is quite unique to the other blocks, since a block is meant to contain three pieces of information: its hash, its data, and the hash of the previous transaction. Now, since the Genesis block is actually the first one in the chain, it does not contain the hash for a previous transaction. So, a hash is like a fingerprint. More on that a little later. So, then we have other blocks which are linked to the previous blocks with hashes. So each block knows it knows its own hash and the hash of the previous transaction. And this way we form this linkage, thus creating a chain called the blockchain. So essentially what a hash truly is like a fingerprint for a file. And we'll learn a little more and deep dive into it later in this video. So let's assume we have these three blocks. I'll just make them real quick. And let's say that this one is incorrect. Let me move it a little here. And we have another one after it right here. And I'll color code it to also be correct. So let's say here someone has tried to manipulate the data. So this block right here knows the hash of the previous block and can verify against it. This block also knows the hash of the previous block. And this one also knows the hash of the previous block when it was unmodified. And if someone tries to modify this block right here, we would know that a modification has underwent, and hence anything that is attached to this blockchain after this specific transaction cannot really be validated. Actually, we can see this for ourselves right now. So let me create a new file, new text document. Let's call it block1. Block1. There we go. And let's enter random text 123. Save it. And let me open my terminal here. Open it here. Let's go to that directory and let's check the hash of this file. There we go. This is the hash of our file. So what I would do is actually output this to block1.sha1. And there we go. Here's the shell sum. Let's open this in Notepad. And here is our hash. Now let's modify the block1 as a perpetrator would. Let's say random text 124. Or rather, let me just update the R to be capital. So it's a very slight modification, but it is a modification nonetheless. Now let's calculate the hash, and I'll output it to block1 modded.sha1. And now we have two of these files. Let's open them. And as you can see, they have completely different hashes. Let me zoom in. Completely different hashes, although the content had not changed by that much. The blockchain relies on a peer-to-peer network where every single person who joins the network has a copy of the entire blockchain, and every transaction is validated depending on consensus, where each of those nodes together decide which transaction is valid and which is not. And this consensus is really important because essentially the one who controls the consensus really controls the whole cryptocurrency in general. And that is why a lot of people had concerns with almost 30 to 40% of Bitcoin being mined in China. Since the moment they reach over the 50% mark, then consensus just totally shifts and they can just do whatever they want because consensus is truly the backbone of how everything is really happening here. So let's look at a few crypto projects, one of them being Tron. Tron, with their aim to decentralize the web, also feature a cryptocurrency, and they aim to make creating decentralized applications painless. It is extremely scalable, and the token itself is quite cheap. Some of their core partners include Poloniex, Samsung, BitTorrent, Swisscom Blockchain, and Opera. Now let's look at our next project in the list. And this one is IOTA. This is quite the interesting one since it's not really a blockchain, but rather something called a directed acyclic graph. And what that is basically, instead of having a chain, it's like a Merkle tree where each thing has its own nodes and it branches into stuff. And this is quite interesting since it's not fully decentralized yet in the public net, but in the test net, they have already reached the stage called removing the coordinator. They're calling it coordicide. It's not fully there yet, but it would be soon. They have quite the gamut to their name in terms of what they're trying to solve, since they are trying to achieve quite a lot here. One of their main features being that they are feeless, so they want to make an economy for machines, and thus enabling digital identity for people and things. The next project we have to review here is WeChain. The purpose of this currency is to actually track the life cycle of supply chains. And it uses something called proof of authority rather than proof of work or proof of stake, which is quite interesting on its own. So that's it for now, and until next time, goodbye. Hey everyone, and welcome back. So now that you know the basics of how cryptocurrencies work, let's take a small dive into exchanges and wallets, and let's practice some OPSEC in general. So this video would be divided into three main categories. The first one being about exchanges, the second one being about wallets, and the third one being about, well, general security practices. So an exchange is basically a marketplace for cryptocurrencies. Now, what you do in these exchanges is, well, you can buy and sell crypto, and where it's stored is basically your wallet. You can use your exchange's wallet, or you can basically just use some other wallet if you prefer. So let's open an account on one of the biggest exchanges, and that is Binance. It's binance.com, and we'll open an account here. You can click on register now. I'll go with email registration, and I had just made this email for this, and let's enter a password, and we'll accept the terms and conditions, verify this challenge, and now on my email I've got this. Let me copy it, go here, paste it. Oops. Copy it, paste it. And now I am ready to go. Oop. You can read this Binance Beginner's Guide if you want, but it's really not that necessary to get started. So let me go back here. And now I would be logged in and I can start trading. Let's sign up on KuCoin as well. Email. Send code. Sending the code. Not a robot, parking meters. Let's go here, and I would receive an email. Let's copy the code, paste in here, set our password, sign up. Here we go. And now our account is set up and we can begin trading. Now let's get to the latter part of the video, and that is about wallets. So I'll be creating a couple of wallets. The first one would be Atomic Wallet. We can go here, download, choose your operating system, I reckon. Download, Windows, hop out of that, and it would download fairly quickly. Let's click on it. It's installing. Let's wait for it. Let's set a password. I'll set a really simple password. Oop. What? Let's create a wallet. Continue. Set a password. Now this is your 12-word backup phrase, and you would need to copy it. So basically, if you ever lose access to your wallet, you would be still able to recover it using this phrase, and I'd recommend that you note it down somewhere physically and keep it safe. So let's open our wallet, and as you can see, we can trade we can store all of these cryptocurrencies here in this wallet. Now let's look at the next wallet we have in our list. Now the next one is a little unique. It is the Firefly wallet for IOTA. Firefly IOTA. Let's go here. Download for Windows. Here we go. Pretty fast. Let's open this up. It's installing. And let's go through the setup. Let's create a profile. Basically, we're creating a new wallet, and I'll call it Demo Wallet 2. We'll be creating a new wallet. And now you can choose if you want a hardware wallet or a software wallet. If you do not have a Ledger Nano or Nano X, then go with I want a software wallet. And let's save the recovery kit template. Save it here. Yes. Click continue. Set a password. I know this is okay. It doesn't let me choose this password. Set up a PIN. And now comes your recovery phrase. Now, just like Atomic Wallet, do not disclose this recovery phrase to anyone and keep it safe with you. Now, with IOTA's wallet, what you would have to do is actually verify this recovery phrase in the very next step that you've written down. So I'll just take a screenshot of it and move it to my other monitor and verify against that. So it asks me what's the word one. Ideally, I would not show this to anyone else, but since this is just a demo wallet, which I won't be using for anything more than this, so I'll let it be. So from my screenshot here, I can see the first one is Scout, so I'll choose Scout here. Second one's Jar, Mammal, Punch, Extend, Era, Laugh, Weasel, Bullet, Aware, Knee, Sense, Step, Guess, Now, Dragon, Exercise, Sock, Dinosaur, Clog, Canvas, Else, Trouble, and Evolve. Now, this is actually really good on IOTA's part, as they kind of force you to keep your phrase safe, as that's something that a lot of people just avoid doing. And now our wallet has been set up, and now we can start adding MIOTAs or GIOTAs to it. Perfect. Let's close this off. Now let's go over a few principles. Never share your wallet seed with anyone, nor shall you share the recovery phrase. Another thing that you should never share is your password or PIN. And remember that no one, even from these organizations who are behind these cryptocurrencies, even they would never ever ask for your seed or recovery phrase. And also, I would recommend that you perform good OPSEC in general, being sure of what you click on and not trying to do risky stuff on the machine where your wallets are stored. Also, if you want to really take this one step further, I would recommend that you actually create all of these wallets and store them separately in a virtual machine where you do nothing else, so that nothing really can touch them. All right, so now you know how crypto works and you know how you can buy it. Now let's look at some fundamentals for trading. So the first thing before we even get into technical analysis is make sure that the crypto you're trying to invest into, it has an actual utility. Nowadays, influencers are promoting garbage and trying to peddle it off as utility coins. Please make sure that the crypto project that you're going to get involved into has some real world utility and is not something which an influencer is just trying to make themselves a few million. All right, so let's perform some technical analysis. So I have a trading view opened up here, and we'll be searching for, let's say, Tron versus USD. So here it is. Let's open this up. And let's analyze the recent time. So let's analyze from here, which is about 1st June till, where's 1st June gone now? 1st June till the current, and let's perform a little bit of an analysis. So the first thing that you would want to do is, let me first open something where I can draw. So I'll just get this section, open this up, and so what you need to look for is the lowest point in general. So for example, in this case, the lowest point in general is this, and we want to look at a recent low, so that is here. So let me position the ruler in such a way so that I can draw a straight line between these points. It's not perfectly straight, but it's straight enough, so I'll just go with it. And I'll draw a thick line, and this one would be orange to indicate a downtrend. Boop. And here we go. So this is the line for the lowest prices, and now we'll want to do the same for the highest ones. So this is the highest point in like historic data, and this is the highest point in current data. So let's try to join these points. There we go. It's close enough. Go with a green color to signify that it's an uptrend. And let's draw a line here. Now, what do these lines signify? So what these lines do is that they kind of predict per day what's the this is the range where the price would be according to the previous trends for a given time period. So all the value of the coin would be within this time period, within this price range, and this one being the lowest and this one here being the highest. And according to this, you can plan when to buy and when to sell. Now, these analyses have proven themselves over the test of time in multiple instances now. So this is why a lot of traders use it. Now, you should also know how to understand these candles, since they are also quite interesting on their own. Let me zoom in on them. So you might be able to see that these candles actually are made up of two parts. One is the body, so that is this region here, and the other is this pointy thing which comes out. This is called the wick. It comes out on the bottom end and the top as well. So the top means the highest value. The body is like the price range where it was selling for average. The top here means the highest value. The bottom means the lowest value it sold for. And a green candle means the price went up over a given period of time, and a red candle means the price went down. So this extremely long bottom here means that this was the lowest price that someone traded for, and that this extremely long one here means that there was someone who profited a bit, or actually quite substantially depending on how much it was, but someone sold for above what the average price was at that point. So that is how you look at a candle and perform a bit of a technical analysis in terms of analyzing a few patterns over the time. Now, I would recommend that you actually consider longer periods of time as compared to what I did. It actually also kind of depends on how long do you plan to hold a crypto for. So that was the basics of how you perform crypto analysis, how you perform technical analysis for a given coin versus a given time.
Time for you to get to know the advantages of using cryptocurrency. As a digital asset that serves users online, cryptocurrency has many appealing benefits. Some of this is thanks to the blockchain technology previously mentioned. It's a strictly monitored process with encrypted transaction and control, thus making this online money a thing for the future. So in this chapter, we'll cover the top 4 benefits of cryptocurrency. The most well-known benefit of this investment is its no third-party involvement. There's always a pattern when using traditional money to buy yourself a new property, setting up your own business, or buying a new car. One way or another, the process requires a third-party involvement. We're talking lawyers, owners, and other external factors such as delays, documentations, and extra fees. This, in general, will consume unnecessary time, money, and energy to the point of giving up. A good example of this scenario would be you're buying a new house. You need to pay a financial advisor who in general advises your financial statement to ensure you have a stable income. Some properties require you to pay for a booking fee to lock your house of choice and many other add-ons. In short, there's a lot of third-party involvement, and it charges you even before you own the property. But this is not the case with cryptocurrency. As mentioned previously, the blockchain system is similar to a self-rights database. It means the contract is capable of being designed and enforced to remove any involvement of the third party mentioned before. Moreover, the contract can be customized to complete a certain transaction at a set date at a fraction of any expenses. Yes, you can eliminate any third-party involvement options. In fact, you don't even need one. In short, you are in control of your own money using cryptocurrency. This is what we call the decentralized system, which means there's no central or federal government regulating it for you. Your transaction is practically immune to any influence from your government and its distinct manipulation. So, it's possible to be able to pay and receive money anywhere in the world at any given time. That transaction is done with minimum processing fees, thus preventing users from having to pay extra charges from banks or any financial institutions. The next advantage would be the risk it holds is lower than traditional currencies. In this era, most people rarely have their cash in their possession now. Instead, they have an array of credit cards, debit cards, and other payment cards available as their nation's method of payment. There's nothing wrong with that, except, however, if the store's connection to the server is disconnected, or their machine's out of service, and you, who do not possess any cash, just ended up holding the line. The thing about these cards are, any purchase you're making, you're giving the end receiver access to your full credit line, no matter how small the amount of the transaction is. The fact that you're giving someone your card to gain access to your account is already a form of breach. Most of this breach is considered secure nowadays using different safety measures like PIN-enabled or pay-wave methods. Then the store initiates payment by pulling the designated amount from your account using the information provided within your card. Cryptocurrency doesn't work that way. Instead of pooling mechanisms, it pushes the amount that's needed to pay or receive to other cryptocurrency holders without any further information needed. Payments are possible without your personal information being tied to you, the transaction. Your account can be backed up and encrypted to ensure the safety of your money. By allowing users to be in control of their transactions, helps keep Bitcoin, Ether, or other distinguished cryptocurrencies safe for the network. Another benefit of using cryptocurrency would be its protection from fraud. We've often heard cases where one's payment card is being used by other users but not the owner. When contacting his card service issuer, it's found that the card has made certain transactions without his consent. This is what we call a fraud case. Most of the time, these fraud cases get away with the crime because it's not easy to trace the fraud back to the perpetrator. What's more, it's even difficult to get the attention of law enforcement to launch an investigation with only a single instance of a crime the perpetrator committed. However, cryptocurrency is not viable to fraud because your personal information is kept hidden from unnecessary prying eyes. This protects you against identity theft. Remember, cryptocurrency is a form of digital money created from code. Individual cryptocurrencies are, as mentioned, digital and cannot be counterfeited by senders. Because the transactions cannot be reversed, they do not carry with them any personal information. This ensures security, and the merchants are protected from any potential losses that might occur from fraud cases. It's very hard to cheat or make false accusations against anyone using these cryptocurrencies due to its decentralized system and the existing blockchain system. It cannot be manipulated by anyone or any organization thanks to its being cryptographically secure. Lastly would be its universality. Over the course of payment history, nations worldwide have their differing methods of payments implemented. We have money goods exchange system and even bartering trade. It's not until traders visited other countries that they found out how to trade items to one another. Thanks to various innovations and developments, we now have multiple methods to trade and exchange money worldwide. But even with all the upgrades, we're still experiencing problems doing transactions across the globe. There's always currency issues, bank authorizations, unacceptable payment methods, and some other varying issues experienced by business owners or travelers out there. The fact is, not all countries have similar financial processing. Your card or currency may not be accepted by other countries, and that is a major setback to your account. For example, most online banking, payment, or cash systems require additional processing fees for their service, even if that account is yours. However, cryptocurrencies are not bound by any of those exchange rates, transaction charges, interest rates, or any other fees applied on any countries. They can be used at any time at any international standard without experiencing any problems. It also saves you a lot of time and money by reducing additional spending over transferring money from multiple countries to another, which means cryptocurrency operates at an international platform, which in turn makes transactions easier than your average telegraphic transfer. To recap, there are 4 major advantages concerning cryptocurrencies. It has no third-party involvement, lower risk compared to traditional currencies, protection from fraud, and universality. Despite the amazing advantages that comes with cryptocurrencies, there are also some setbacks to this investment as well. We'll uncover those in the next chapter. Now we'll finally touch upon the future of cryptocurrency. These digital currencies have been said to be able to capture the world of online finance. With a blockchain technology behind it, the future of cryptocurrency is showing a prosperous potential. Starting in 2017, the alternative currencies will need to watch its price closer than usual. Studies show that Bitcoin experienced a drop in its price. It seems like a cheaper cryptocurrency by the name of Ether reached its highest at $40 a unit. That's right. Although the mechanism behind Ether prevents it from being used as a direct payment method, this cryptocurrency seems to have a brighter future ahead. This is all thanks to its smart contract concepts. On the other hand, cryptocurrencies that are concerned with privacy are starting to gain more prominent favor amongst users. Bitcoin, unfortunately, despite their security measures, continues to have loopholes that can be exploited for access to users' personal data. But this doesn't stop users from investing in Bitcoin. Up to this day, Bitcoin is still being accepted as a means of payment. The level of acceptance is clearly bringing this alternative currency to the mainstream. Some companies are genuinely thinking about investing in this currency, further fueling its journey to the world of financial currency. Are we going to see a new norm of currency by cryptocurrency someday? Researchers concluded that it's still too early to predict that it would be, but one thing is for sure, that this currency is slowly making its way into the world. The most targeted group of all would be the technologically savvy individuals, and most of us are already part of this group. More than 50% of our time spent online, and it won't be long until it reaches 100. One day we might even consider using cryptocurrency as our standard currency for a more universal world of transactions.